Ever since my SRS video last year, many of you have been asking me when should I top up my SRS for tax relief and how much tax do I actually save. So in today's video, we'll go through all of that. Plus, being as transparent as I've always been, I'll show you guys my SRS portfolio that's now sitting at around 20+% gains and what I'm doing with my top up again this year. Without further ado, let's dive straight into today's video. Let's go. So let's dive in. First, what exactly is SRS? It's basically a voluntary tax saving scheme designed to help you prepare for retirement while getting tax relief today. In simple terms, it's a deferred tax scheme. You contribute money now, it reduces your taxable income for the year, and you'll only be taxed on your withdrawals much later. For Singaporeans and PRs, the contribution cap is $15,300 per year. For foreigners, it's $35,700. Now here's an important point that most people don't realize. The retirement age you lock in depends on when you open your SRS account and make your first contribution. That's the statutory retirement age at which you can start withdrawing your SRS funds without any penalty, and you can do so over a period of 10 years. Right now, the official retirement age is 63, but from 1st of July 2026, it will increase to 64. So if you haven't opened an account yet, here's a small tip for you. You don't have to top up that full $15,300. Even $1 will do to lock in your retirement age at 63. You can open an SRS account with any of our 3 local banks, DBS, OCBC, or UOB. So the question is, when should I top up SRS for tax relief? Now this part is really subjective. It depends on the stage of life where you're at and whether the amount of tax saved feels worth it to you. Let's run through a few numbers so you can see the thought process. But before that, here's something important to keep in mind. Once you top up your SRS, if you have to withdraw the money before the official retirement age of 63, there are 2 downsides. You'll be charged a 5% penalty and 100% of the withdrawn amount will be taxed as income. That said, SRS is a lot more flexible than topping up your CPF for tax relief because at least if you really need the money in cases of emergency, you can still withdraw it. Let me bring you back to 2023. This was about 3 years into my first full-time job, and my annual income then was around $44,400. At that income level, my tax computation looks like this. First $40,000, tax payable is $550. Next $4,400 at 7% is $308. So that's a total of $858 in taxes that I have to pay, which worked out to be roughly an effective tax rate of 1.95%. Now, if I had decided to top up that full $15,300 into my SRS that year, my taxable income would drop to $29,100. This would mean that the first $20,000 is tax-free, $9,100 at 2%, and that's a total of $182 tax payable. The total tax savings is $676. Now here's the honest part. I think some of you might relate if you're in that income bracket. Even though I could have saved that amount of money, I didn't top up my SRS that year. You might be wondering why, because at that stage, I was still building my 12 months emergency fund. Transitioning myself from employee to self-employed, I needed a cushion that is bigger to fall back on if things went south. So I'd much rather have that $15,300 liquid, even if it meant paying a few $100s more in taxes, because that peace of mind was worth way more. Fast forward to 2024, this was the year I made that first SRS top up. By then, my annual income was slightly over $100,000, and this is how my tax numbers looked that year. First $120,000, the total tax payable is $7,950. That's an effective tax rate of 6.63%. If I decided to top up $15,300 into my SRS account, my taxable income would drop to $104,700. That would mean that in total, I'll pay $6,190.50 in taxes, or an effective tax rate of 5.16%. That's a tax saving amount of $1,759.50 to be exact. When you think about it that way, not topping up my SRS would mean that $1,700 basically goes to the government as taxes. It's an expense and it's money that is no longer mine. But by contributing to SRS, I get to save on taxes. Because the amount of money I topped up was invested, it has now grown by over 20%. And from this example, you can already infer that the higher your income, the more significant this SRS tax savings become. So if you're earning below, say, $60,000 to $70,000, the savings might not feel as huge. A few $100 maybe. But once your income grows and crosses that $80,000 to $100,000 mark, that's when SRS starts to make real financial sense. Now, let me share with you the investment update from last year's top-up. I remembered I brought along my September SRS statements as well. This number is a little outdated, so I'm pulling today's market data to share with you guys. Last year, I topped up $12,700 and used it to buy 300 units of DBS Bank through FSMOne's platform at $42 per share. As of 7 November, when the stock market closed, DBS price was at $54.98, bringing my total portfolio to $16,494, an unrealized profit of $3,878.52, an equivalent of 30% gains. And along the way, I've also received around $630 in dividends. If I had simply left the money sitting in my SRS account, it would have just earned 0.05% per year. Basically, nothing. So for me, I see SRS in two parts. The first step is topping up for tax relief. That's what gets you the immediate benefits. The second step, which I've learned to be just as important, is making sure that the money doesn't stay idle for years. That's why I decided to invest my money. The next part of this video is done in collaboration with FSMOne. Let me share with you a little bit more about how I use them for my SRS investments and why. Out of all the types of investments you can make with your SRS funds, I personally chose to invest in individual Singapore stocks, mainly to grow my existing holdings. So I do have Singapore bank stocks, REITs already invested via my own cash in various brokerage accounts. It's a conclusion I came to after looking at my overall portfolio and realizing that I wanted to keep things simple, add to what I already understand and believe in. When it comes to SRS investments, the range of options can be quite wide, and each come with a different level of risk. Here's a general risk ranking you can keep in mind. Number one, you can use your SRS funds to invest in Singapore savings bonds, T-bills, fixed deposits, insurance endowment plans, cash management portfolios, ETFs or unit trusts. Individual stocks is the next one as well. And when it comes to investing SRS monies in individual stocks, there are a few brokers that support it, like Poems, FSMOne and Tiger Brokers. After comparing across the three, I went with FSMOne because it was the cheapest for the amount I was investing. Here's a quick comparison for the fees. Poems charges 0.08% with no minimum commission. FSMOne is a flat $8.80 for stocks, and for ETFs, it's a flat $3.80. Tiger Brokers is 0.12% platform fee, a minimum of $5. With the amount of money I was investing, FSMOne was the cheapest to go with. Of course, investing in individual stocks like I did is definitely riskier than going for ETFs. FSM is the only platform that offers 0% charge for ETF regular savings plan. This basically means that you make an arrangement to invest in regular intervals into an ETF of your choice. So if you prefer something less risky, look at ETFs instead of individual stocks. FSMOne has this feature called a fund selector. You can filter by SRS payment method and see the full list of eligible investment products. Some examples include ABF Singapore Bond Index Fund, Amova Singapore STI ETF, Lion Philips S-REIT ETF, and many others as well. Personally, I use FSMOne not just for my SRS investments, but also for my family's S&P 500 regular savings plan into CSPX and Ireland domicile ETF, which I talk about in this video if you want a reference. From now to 30th January 2026, you can receive up to $200 when you invest your SRS monies in unit trusts and up to $105 in ETFs on FSMOne. Existing SRS users get to enjoy a promotion as well. You can check the description below for more details. If you have not heard of FSMOne, they are the business to retail investor platform operated by iFast, a publicly listed company. If you do face any issues, there is a hotline to call in or a live chat feature that operates Mondays to Fridays, 8:30 a.m. to 10:30 p.m. and half days on Saturdays. Otherwise, visit their office at Raffles Place. Not forgetting FSM Invest Expo, Singapore's largest invest expo that is held every year. If you're keen to know more about SRS investing or general investing, sign up because it's a free event, and not only do you get to learn, you get to win a lot of attractive prizes too. I'll be making my way back just for this event, and I hope to see you guys there in person. So that's my full thought process from when I decide to top up my SRS to what I actually do with the money once it's in the account. At the end of the day, SRS is just a tool. The real difference comes from how you use it, whether you are simply letting the cash sit there for the tax relief or taking the extra step to let it grow over time. For me, it has been a meaningful way to save on taxes while also continuing to build my portfolio in a way that aligns with what I already understand and believe in. If this video helped you understand SRS a little better or gave you ideas for your own situation, I'd appreciate if you could like and subscribe, follow along on this journey, and if you want to, leave a comment down in the comment section below. Let me know what are you doing with your SRS funds this year. And if you're curious about how I invest monthly into the S&P 500 using FSMOne for my family's portfolio, this video is linked up above and down in the description box below. I'll do an update late this year or early next year how the portfolio is doing. Thank you so much for watching today, and as usual, have a great week ahead. If you'd like to connect a little bit deeper, come join my Telegram community, and I'll see you guys in my next one. Bye-bye.